Hello, my name is George, and in this video, we're talking about the best debt consolidation companies and how they can help you manage or pay off what you owe. If you're struggling with multiple credit card payments, high interest rates, or just feeling overwhelmed by debt consolidation could be a smart way to simplify things. By the end of this video, you'll know which company might be the best fit for you, what to watch out for, and how to avoid common mistakes. And by the way, all the companies I mentioned in this video are available by clicking the first link down in the description of this video. And before we dive in, a quick note, some links in the description are affiliate links, which means I may earn a small commission if you make a purchase through them at no extra cost to you. Thank you so much for supporting my channel, and now let's get started. What is debt consolidation and how does it work? Debt consolidation is a way to combine multiple debts into a single payment. Instead of juggling different credit card bills and loan payments each month, you take out one new loan or enroll in a debt program to make things easier. The goal is to get a lower interest rate, a more manageable payment, or both. Now, there are a few different ways to consolidate debts. Some companies offer personal loans to pay off your existing debt, while others negotiate with your creditors to lower what you owe. The best choice depends on your credit score, income, and how much debt you have. Now, let's go over some of the best debt consolidation companies and see what they offer. Is InCharge Debt Solutions a good choice? InCharge Debt Solutions is a nonprofit company that helps people manage debt through something called a debt management plan. This isn't a loan or a settlement program. It's a structured way to pay off your debts over time, usually between 3 to 5 years. To qualify, you need at least $1,000 in debt, and you'll have to pay a monthly fee of around $33 plus a one-time setup fee, which depends on your state, but is capped at $75. Now, one of the biggest benefits of working with InCharge is that they help lower your interest rates, which means more of your payment goes towards paying off the actual debt, not just interest. Their counselors are certified by the National Foundation for Credit Counseling, so they can also help you with budgeting and financial education. This option works best for people who have steady income and want a structured way to pay off their debt without damaging their credit score. However, if you're looking for a way to reduce the amount you owe, this isn't the right program, since you still have to pay back the full balance. How does National Debt Relief work? National Debt Relief takes a very different approach. Instead of helping you manage payments, they work to negotiate your debt down, meaning you might not have to pay the full amount you owe. To qualify, you need at least $7,500 in debt, and their program typically lasts 1 to 4 years. They charge a fee of 18 to 25% of the debt they settle, which means if they negotiate $10,000 in debt down to $6,000, you would still pay around $1.8 to $2,500 in fees. Now, the biggest downside is that debt settlement hurts your credit score. Why? Well, because in order to negotiate, you usually have to stop making payments to your creditors, which can lead to late fees and damage to your credit report. Some creditors also refuse to negotiate with debt settlement companies, meaning there's no guarantee this will work for all your debts. This option is best for people who are struggling with serious debt and don't mind taking a hit to their credit score in exchange for paying less overall. If your credit score is a big concern, you might want to look at other options. Is SoFi a good lender for debt consolidation? SoFi is an online lender that offers personal loans for debt consolidation. This is different from the first two options because you're not enrolling in a program. You're just taking out a new loan to pay off your existing debt. Their loans range from $5,000 to $100,000 with interest rates between 7% and 22%. Unlike many lenders, they don't charge any fees. No late fees, no origination fees, and no prepayment penalties. One unique perk: if you lose your job, SoFi pauses your payments and even helps with job placement, which isn't something most lenders offer. SoFi is best for people with good credit who want a low interest loan to pay off high interest credit card debt. If your credit score is low, though, you might not qualify for their best rates. How does Prosper Funding work? Prosper is another personal loan lender, but instead of borrowing from a bank, your loan is funded by investors. It's an online lending marketplace that connects borrowers with individual lenders. Loan amounts range from $2,000 to $35,000 with interest rates as low as 6% but as high as 35%, depending on your credit score. They do charge fees, including an origination fee of 0.5 to 5% and late fees if you miss a payment. Prosper is a good choice if you need a loan quickly and have a credit score of at least 640. But if you don't have strong credit, the fees and high interest rates might not make this the best option. Should you get a debt consolidation loan from Wells Fargo? If you prefer working with a traditional bank, Wells Fargo offers both secured and unsecured personal loans for debt consolidation. Loan amounts start at $3,000 and go up to $250,000, with interest rates ranging from 7% to 20% for unsecured loans and 6% to 8.5% for secured loans. If you take a secured loan, you'll need to put up collateral, like your home or car, which lowers your interest rate but also means you could lose that asset if you can't repay the loan. This option is best for people who already bank with Wells Fargo, since existing customers may get better loan terms. If you don't have a strong credit score or equity in a home or car, though, getting approved might be harder. Which debt consolidation company is the best? Well, this depends on your situation. If you want structured debt repayment without damaging your credit score, InCharge Debt Solutions is a solid choice. If you want to settle your debt for less but don't mind hurting your credit, National Debt Relief might work. If you have a good credit and want a personal loan with no fees, SoFi is a great option. Prosper is good for quick loan approvals, while Wells Fargo is better if you want a big bank with secured loan options. How can you avoid debt consolidation scams? Debt relief is a big industry, and unfortunately, there are a lot of scams out there. Be careful of companies that charge high upfront fees before doing anything, guarantee they'll settle your debt for pennies on the dollar. Use high-pressure sales tactics to get you to sign up quickly. A legitimate company should be transparent about their services, fees, and risks. If something feels off, do your research before signing up. And remember, all the companies that I mentioned in this video are available by clicking the first link down in the description of this video. I hope this video was helpful. Thank you so much for watching. Till next time.